Hey everybody, how's it going? This is Seth Williams and Jaron Barnes, and you're listening to the REtipster podcast. Today's episode, we're talking with a longtime member of the REtipster community in the Land Investing Masterclass, JT Olmstead. So JT is an IT engineer turned real estate investor, and he's been investing for over a decade now. And the reason I thought JT would be a great guy for us to talk to is because I've had the occasional interaction with him over the years as he's been involved with our community, and I actually got to meet up with him in person at the Bigger Pockets conference last year in Nashville. And every time I've talked with him or just seen his comments and posts on social media and our forum and things like that, he always has just kind of a unique perspective on things, and he always adds a lot of value in the things that he says. He's one of those guys that's like worth paying attention to because he just has a lot of valuable contributions to give. And I know he's done some notable things in his land investing business, which he's now doing full time, which is another notable thing about where he's at in his journey. So I thought we should just get on a call and just start talking, and hopefully something great will come out of this. So yeah, JT, how are you doing? Welcome to the show.
I'm doing great. Thanks for having me on.
Yeah, absolutely. So I know a little bit about your story, but maybe we can start from the very beginning. What is your backstory? Like, how did you first get into real estate, and how did you get into land investing specifically?
Yeah, it was definitely over time. So I've probably been obsessed with investing for about a decade or so. And obviously, you don't get involved in investing in general without running into real estate, right? So kind of on and off, I would come across various real estate opportunities or real estate education pieces and kind of learn bits and pieces, but never really caught the bug until about three years ago or so, where after kind of running through some models and deciding, where should I start allocating some of my capital that I've been saving up over the years, I determined that real estate was going to be an awesome opportunity for, risk adjusted for those returns. So I looked at single family and said, nah, it's not really going to be my jam. I don't think that's what I want to do. And then I jumped feet first into commercial, which was quite quite a way
Wow,
to stumble
that is a
into
big
real
jump.
estate.
Yeah.
Yeah, so that's a whole story in of itself. But ultimately, after getting into commercial, I continued to keep my ears open, as I often do, and looking for other opportunities to invest. And that's when I came across land investing on one of the financial podcasts that I followed at the time, and it was amazing. They sounded just too good to be true. And so being the person I am, I started investigating. I said, well, this sounds ridiculously good, but like, how good is it really? So I jumped on all the places I could find information, right? Bigger Pockets and other forums, and started looking around. And I found a couple of major players in the space that really in the education space for land at the time. And after looking at all of the other individuals, I settled on the REtipster Masterclass, right? Because
Yeah.
it was just amazing to me what kind of opportunity you guys presented the masterclass, because of all the pieces out there, I was really enthralled by the way that Seth approached education, right? I was really impressed with the way that you were willing to like kind of put out all the information to kind of share it with everybody, and really wanted to like legitimately help people kind of be better at investing and be better investing in real estate. And that really spoke to me as an individual. And so I said, you know what, he's the guy I want to align myself with.
Yeah,
So
cool.
I jumped into the course, and the course is obviously fantastic, super detailed. I love it. But yeah, so that's kind of how I found my way into real estate in general, and then ultimately into land.
Yeah, it's funny that you say that, JT, because we've been talking recently about coming up with different products and kind of just different things to bring to our audience here at REtipster. And with the land masterclass, it's kind of a funny thing because we really don't have any way to upsell or come up with like a land 2.0 version of the land masterclass or whatever, because we've literally given everything and the kitchen sink in the land masterclass. And it's always awkward when people come to me and they say, why should we buy the land masterclass over, this person's course or that person's course? And I'm like, well, obviously I'm going to be super biased, so you probably shouldn't ask me that question, because I'm going to be like, it's the greatest thing since sliced cheese. But what I hear consistently from other people is that, it's just much more thorough than anything else that's out there. I mean, Seth really just lays the foundation from start to finish. And I can't tell you, I mean, we just got an email this week, wasn't it, Seth, where somebody, said, I literally just did everything you said in the course, and I just did my first deal. And like, I am so thankful for you guys. This is incredible, because we really don't hold anything back. I don't know. You just hit a passion button for me, man. Cause there's a reason why, I work here, and that, I'm so passionate about REtipster, because Seth has created this community where like there's no strings attached. There's no like, I give you this little course, but if you try, if you pay $10,000 more, $100,000 more, then you're going to get, the real stuff. It's like, no, here's everything. And majority of it's for free on the blog. So it's pretty amazing.
Yeah, that's actually, I think, the key thing that tipped in y'all's favor at the beginning was exactly that. I looked at it and said, and they were pretty, at the time, very straightforward, and said, like, most of the stuff you can find scattered around our YouTube channel and blogs and all these other things. But if you want a streamlined, really beefed up version of this, this is it. And I said, if he's willing to take, if he's willing to take all this stuff and really trying to help people by giving it away effectively, and then, you can buy in and really like supercharge that, then I think that's exactly what I want to do, right? And I've been continually impressed by how detailed everything is in the course, and then again continually impressed by the value that's continued to be added over the years, right? It wasn't like I started with one and that's what I've got, X years later. It's just gotten better, and so more stuff has been added and clarified, and as things continue to progress. So yeah, I've been pretty happy with it.
Yeah, man.
Thanks a lot. Yeah,
well,
it's great to hear.
Well, hey, I wanted to ask you, JT, a little bit more about your land business specifically, because I'm curious, when you went full time, how much did terms deals versus cash deals factor into the ability to be fully sustained on your land business? Do you do a lot of term deals? Do you do mostly cash? Kind of what's your whole situation going on?
Yeah, I would say in the beginning, I was kind of open to both. Initially, I was thinking, oh, yes, I'm just going to build up a huge Nort portfolio and this can be awesome, all these random streams of income. And over time, I kind of determined that I didn't want a massive note portfolio in as far as like the volume of notes, but I would rather have kind of higher quality notes and less of them to manage. And so right now, that's kind of what I do. I do a mix of owner financing and cash, kind of more expensive owner financing. I'd say my average note is around $700 right now. And so I kind of shoot for that higher price point that allows people to kind of come in such a way that I don't have to have, 7 $100 notes. I just have one $700 note. And I kind of prefer that model.
So you mean you're getting paid $700 per month? Is that what you mean by that?
Correct. Yeah. So the monthly note payment is around $700.
Okay, cool.
Yeah, exactly.
Is that like not including any other escrows or property tax stuff or fees? It's just, that's the straight up principal and interest?
Right. I mean, it's usually P&I is like 700-ish, right?
Mm-hmm.
And then cool. I have small note servicing fee, things like that, but it doesn't really include any other escrowed items.
Mm-hmm. Gotcha. Now, I'm actually curious. So I know a lot of people who go full time, sort of, dovetailing on that seller financing question from Jaron. A lot of full timers will do like a high volume of deals. You're not necessarily focused on doing a few big ones. What's your approach? Are you trying to just focus on the few huge deals, or are you just willing to take anything and everything as long as it takes money, or as long as it makes money for you?
Yeah. So I've tried. I started actually my first purchase was a $50,000 property, but I've kind of since then tried smaller stuff as well. And I found that for me, it just doesn't tend to make sense with the way that I've built my model to work with anything that's going to sell for less than, let's say, $15,000. But I really do. I love the fact that with owner financing, you can kind of take it either way, right? You have people who basically set up a whole team, like really a machine to crank out deals. And when I thought about, do I want to run a small team of employees, VAs, whatever, and then have this massive machine where you're churning through deals, or would I rather run like a smaller operation as far as volume goes, but just kind of a higher price point? And for me, luckily, I didn't have to have the cash flow right out the gate to quit my job. I had been building up this nest egg that I was sitting on, and that was my capital I was going to use to invest in land. Right, over the years, I've been saving and saving and saving, and so I had enough money to set aside and say, "Okay, I'm going to live off this money while I figure it all out." Right, and then I have this money set over here to really invest with. And so that let me kind of try some things and kind of venture into different areas until I figured out what I really liked. And for me, that's kind of 5 acres and up ish. And usually around $15,000 on the sales side, and that's kind of my low end. And then from then on up is where I'll take anything up to, I don't know, $250,000 in sales, basically. Like that's kind of where I'm.
Yeah. So this first deal you just mentioned, the one for $50,000, so that was your purchase price, is that right?
Correct.
Because that's a lot of money. Maybe you can tell us, like, just like even today, if I were looking at you like that, I'd be like, whoa, like that's a huge amount of cash to land the line for a deal that, like, I better be pretty sure about this thing selling for a lot more. So, like, how did you get comfortable with that? And, what did you end up selling it for? Maybe you can dissect that one for us.
Yeah, absolutely. So again, luckily for me, or strategically, really, I had gotten myself to the point where I had a fair amount of capital to invest, and so 50,000 wasn't all of the capital I had in the bank, and so I was willing to take a risk on it. Combine that with like we'll call it youthful optimism about how things were going to go, resulted in me doing a pseudo self-closed $50,000 deal, buying from a tax sale, like a lean investor.
Oh, yeah?
For my first move. In hindsight, not the best option ever, but luckily for me, it worked out okay. I ended up buying a couple properties from him in one shot, which I landed off of my first postcard mailer, actually, at the time. And one of them, I have two groups, basically two properties is what it breaks down to. One of them I got for $20,000. And then I sold for about $80,000, owner financed about maybe 5-6 months later. And the other one I bought for the other 30 of the 50. And that one I ended up really trying some stuff with. So I ended up doing some subdivision on it. I ended up kind of bringing in power. I kind of did a whole lot of things I just wanted to try at the beginning. And ultimately, I think I was all in at maybe 50 or 55, and I sold it at 85. So I made a decent profit, but not killing it. So
was that a cash sale, or was that seller financing, or?
That was seller financing, but with 40,000 down. So they put 40,000 down on the property, and then I financed the remainder.
Okay, so you ended up making most of your initial investment back pretty quick then, right?
Yeah, I did. I broke even in roughly 12 months, right? So that's kind of my rule of thumb for most of my owner financing. I don't really care what the terms are for the most part, as long as I'm kind of cash out in 12 months or less.
JT, I want to circle back a little bit on a couple things that you mentioned there, because it was really interesting. I'm really curious from a practical standpoint, and again, I don't want to get like too personal into your own, like how much money you take as a salary and all that stuff. We don't have to go into all of that, but just at a high level, one of the things that I know beginning land investors really struggle with is understanding cash flow management in their business and then in their lifestyle, especially when it comes to, their personal income. Like, how much do I take home versus how much do I keep in reserves versus how much do I have in inventory? And the fact that you got started and you were like, okay, I have X amount to live off of while I figure this out, and then I have X amount to buy property. Could you explore that a little bit with us? Like, can you explain what your practical process looks like? Do you say, okay, I have this much, so I'm going to live on, doing budgeting in the rears, where you have money this month and then you use the money from this month to pay for the following month, or, past month's expense or revenue to cover this month's expenses? How do you handle all of that?
Yeah, so suffice to say that could be a very messy process, right? But so I've been a huge proponent of kind of the financial independence, retire early movement for a long time. And so because of that, I've always worked hard to keep my expenses reasonably low, especially in relation to my income. And I've worked to kind of build up those savings investing portfolio. And so when I stepped out of my full-time job, I had quite a bit of money set aside, right? And so I took that money, carved out maybe 12 months of living expenses, and said, okay, this is what I need to live for the next 12 months, right? I'm going to put that to the side. I'm going to take the rest of this and then try and buy land, So, and by then I had been investing for a while in land. And so I kind of knew generally what I wanted to do, because I started off with my job and then ultimately decided to leave my job, right? And it was it definitely enabled me to setting aside the money enabled me to kind of feel comfortable, right? Because I'm not the kind of person who's like, I got $10 in my pocket, let's make this work. So I needed that side money to feel like it was going to be okay, and that the world wasn't going to collapse around me when I make some mistakes, because inevitably you are, right? So I took that as, okay, I'm going to be good here, let's go ahead and figure out what to do with land. And then I started, took that chunk and started dabbling. To be honest, I still haven't taken any money out of my land business yet, because I have other investments in pockets I've been kind of liquidating or tapping out of and shuffling, because I've decided at this point to effectively go like almost all in on land. I mean, I have some cash reserves set aside besides my living expenses just for a minor diversification. But I'm kind of taking on a lot of risk to just push everything into land at this point, because I think that now is the time to double down in my life. So I'm kind of I'm putting everything up, pulling everything else off the table and pushing all my chips into that side, So it's like, okay, this is gonna have to work. I'm gonna make it work, So far it's been great, but it's just a matter of kind of deciding to do that strategically. So as I liquidated different things and I kept that bucket, up to the 12 months floating, amount, and then kind of kept pushing everything else I kept getting into land.
So you mentioned 12 months reserves. Is that kind of the roughly how much you suggest people have before they go all in on their land business? I guess really what I'm looking for is, if somebody was like, okay, I'm listening to this podcast right now and I want to be full-time in my land business and I don't want to do a bunch of term stuff. Like, some term stuff for cash flow is cool, but just like you, I want to model my land business based off of JT's model. What would you suggest in terms of reserves? And then what would you suggest in terms of like cash flow management? Like, how much should they there's this whole concept of like running your business where you have revenue from last month and then you use that for this month's expenses, doing it in the arrears. That's an option. There's other, financial management systems out there like Profit First. There's a whole bunch of stuff. So I'm just curious, because you're actually doing it, like you're in it. What would be your advice to the person that wants to do what you're doing from a management standpoint?
Frankly, my advice would be to get some terms deals, but assuming you don't want to get some terms deals, I would say, and I can only speak for me, what I'm comfortable with, but I would only be comfortable if I had that 12 months, right? So I would say, look, if I guess it really boils down to the idea that you have to be able to consistently make enough money to cover your expenses for your business, right? And then have enough excess to kind of siphon off the top, right? So if you know that you need whatever, $15,000 a quarter, you need to pull off the top, then maybe maybe you do it $5,000 a month. Maybe it's 15,000 in month 3, but whatever it is, you just need to be comfortable that the money you're going to be rolling is there. And for me, I'm just not the kind of person, unless it's not a paycheck anymore. So I don't know when my land's going to sell. I hope it sells 1 month, 3 months, 6 months, but it could be 12 months, right? And I can't put my financial circumstances on the line and hope that this pays off in 12 months, right? So I need to make sure I have enough there to say, okay, I've got this many irons in the fire. One of them will pay off in the next 6 months, or will pay off in the next 3 months. And once I get to that point where you have a consistent deal flow, right? You consistently have stuff on the market at varying price points at varying times, then you can really keep that rolling. And I find that sweet spot for me and for most people is like maybe 10 deals, right? So if you've got like that 7 to 10 deals, something's going to hit, right, in a certain time period. And so it's just a matter of which one will sell when, and not a matter of if something's going to sell, because it's unlikely, that it implodes, assuming you're not like all in one county or whatever, it's not going to implode and it's all going to dry up. So
actually, what you just said there, not being all in one county. So how many different markets have you worked in historically? And like, are there certain ones that you find you go back to again and again because they produce?
Yeah. I would say, I would say for me, it's states more than counties that I go back to again and again. But I've kind of dabbled in probably more than a dozen different states. So a lot of one-off deals and different things that have come my way that I've kind of tried out. And I find that right now I'm really focused in 2 different states, one in the South and one in the West, right? So I can kind of figure out, all right, these are the 2 states that work well for me. And the thing I love about it is that once you get everything in place, it's really just a matter of like finding the lead and pushing it into the machine, right? Because when I start in a new state, now I'm like, okay, I got to find somebody to close this. I got to find somebody for due diligence. I got to find, all these different pieces that come together. And you don't know how good they're going to be. You don't know how expensive they are. You don't know how fast things are going to get done. You don't get priority at all because you're just some random person off the street. So it's much more difficult to kind of do that again and again and again in different places than it is to really put everything in place for one state or one area. And then it's so simple to just kind of push it in. So, yep, my attorney doesn't need extra docs because they have all my docs already. I just say, here's the contract and here's their contact information. Let me know when you're done. And that's it, and then I'm finished.
Yeah, gotcha. Yeah, and within those states, are you focused in like a certain quadrant of the state, or is it just like anything in that state is fair game?
I would say for me, pretty much anything in the state's fair game. So, there are definitely preferred areas, right, of various states that will make sense, or you'll be more likely to get certain deals. But for me, I'm kind of willing to go anywhere in a given state. And so I'm not the kind of person that manages buyers lists and those kind of items historically, because I've been kind of all over the map, different types of properties, different sizes of properties, different areas of the country. So building a buyer's list was kind of pointless because I was going to be in another state in 2 months, So until I kind of worked through exactly what I wanted, and very recently in the last 6 to 12 months, I've settled on where I'm going to really be focusing. It didn't make any sense for me to manage that way.
Yeah, gotcha. When we were in Nashville, and I know you sort of mentioned this a little bit earlier, but you were telling me about this property that you did some subdividing on. I think you said it was one of your first ones, where you were actually like getting in. What did you get, like a bulldozer and push dirt around or something like that?
Yeah, exactly.
When I heard that, I was like, whoa, that's like, I don't really know anybody who's done that themselves. Like they're actually the ones shaping the earth. So can you tell us like, what was it like to subdivide property and to do it to that extent where you're actually like, getting your hands dirty?
Yeah, so luckily for me, this piece was a few hours away from my house, right? So it's like maybe an hour and a half, 2 hours from where I live. So it wasn't an impossibly far drive. I could get kind of hands-on. Certainly not something you have to do, but honestly, at the time, I was still in experimentation mode. I wanted to try different things. I was like, what's it like to get out there? And so I got that property and was talking to another land investor here in Arizona, and they mentioned that I might consider subdividing it. Hadn't even crossed my mind. So they put me in contact with a surveyor. Surveyor gave me a quote, and here where I was at, it was like maybe $1,500, I think, $2,000 total to get it subdivided. In Arizona, you don't have to have road frontage or whatever. You can just add easements and different things. So it wasn't as difficult as some other parts of the country. And I also don't have to pull out stumps or, things like that. So it's just kind of pushing dirt around and dozing over some bushes. So I was like, yeah, this is doable. I could try this. So I carved it up 5 ways. I contacted the local electricity and they put power in. And before that, everything got staked out, and I went out there with a family member, and we rented equipment and went out there and started scraping the dirt and using excavators, and which is not as challenging as it might sound. It's actually kind of fun. So I don't know if I'm not gonna be doing it on every property, but I definitely enjoyed the process as an experiment.
Yeah, man. Did you document that experience at all? Like take pictures? And
not too much. A handful of pictures, unfortunately, but not too much documentation there.
What was it like just to have that kind of power and destruction at your fingertips? Just like...
I had kind of dipped my toe in it when I rented a backyard excavator, the smallest type, micro, basically, to tear up some stuff in a backyard that I had here in Phoenix, in the Phoenix area. And so I was like, these aren't nearly as scary as they sound. So I'm going to rent a bigger one and pull out stumps on this property. It'll be great. And I will say that the bushes are surprisingly tough, but it was a lot of fun being able to just kind of tear stuff up. I kind of want to go to the next level up. I'm like, how do I get myself one of those dump trucks, with the wheels the size of my house? I want one of those. Yeah. But I'm going to have to work my way up to that first, I think.
If you ever employ dynamite or explosives, let me know, and I can fly out there and we'll get a really YouTube video for that, because that would be a lot of fun.
That would be a lot of fun.
I don't know the legality of that, but I don't know. It's Arizona, right? Anything goes there.
Practically so. Yeah. Well, maybe I'll have to start sending some mailers with mountainside property in mind. So yeah, this could be good.
Yeah, cool.
Hey, JT, I wanted to ask you, you were saying that you buy property kind of everywhere. Now you've kind of narrowed down to specific states, but I know some land guys will buy anything, like literally any kind of property, because they want to maximize their direct mail costs, and they're okay sitting on property for 2 years if it takes to sell, and they'll buy it landlocked, they'll buy whatever because they say eventually somebody will buy it for the right price or the right terms. It doesn't sound like that's your model, but I'm just curious, do you mess around with landlocked properties at all? Do you know, explore kind of those properties that are less desirable, or are you just always going after something that's premium?
Yeah, I would say in the beginning, I probably took on one too many headaches, thinking I could make this work, convincing myself that it would be okay. And since then, I've decided to kind of really narrow down to stuff that really hits it. Because, I mean, ultimately, if I had $10 million to deploy, I would buy practically everything that I could get at a screaming deal. And I don't care how long I sat on it because the ROI would be fine. It's just a matter of waiting. But I don't. So I have to focus on what I can turn reasonably quickly to a good buyer. And that means it's got to be quality property for the most part, right? It's more difficult unless I'm getting some just extremely streaming deal to sell property that's hard to get to and has really like off-putting attributes. And so I've definitely passed on several properties that were, poor access, or the neighbors were just going to be a nightmare, or whatever the circumstances was. I wanted something that you could put up that the buyer can drive up to and say, "Wow, this is a great piece. I want to buy it today." Right. So kind of narrowed down where I know that that's kind of what I need, because that tends to flip the fastest
Yeah.
and the easiest. Yeah. And even though I honestly tend to pay like a higher percentage, I think, than most investors do because of that. But I'm cool with that because I tend to flip them faster and a little bit easier.
Yeah, you and me have a similar business model. Yeah, so I wanted to ask about, you were saying that you don't do buyers lists and you don't really service that. Are you exclusively using agents, or do you still do like, Facebook Marketplace, Craigslist, that kind of thing? What's your strategy there?
Yeah, so I try and stay abreast of kind of the general trends as far as sales go. But to be honest, earlier this year, I made a decision to kind of put myself out of the sales part of the process. So I've removed myself from that whole wing of it, and I only sell through two avenues at this point. One, at least the properties that I buy. One, I'll list it with a land specific agent right in the area. If it's above a certain price point for me, that's usually 75 or $100,000. If the sale is going to be around there or higher, I will put it to an agent, because I find that at that price point and up, they often want someone to meet them on site and hold their hand and kiss their babies or whatever they want, right? So just to make sure things go smooth. And so otherwise, I put everything else. I partnered with Peter Toth, and so he and I work together, and he handles most of my sales kind of across the country.
Oh, cool. Interesting. Yeah, is he? We had him on the podcast a while back. So he's doing that for a number of land investors, right? Sort of being their sales guy.
I'm definitely not the only investor he does it for.
Mm-hmm.
And so but we've been partnering together for almost a year now, and it's been going great.
Cool.
That's awesome.
Yeah, when we talk about this idea of sticking to the more valuable properties that just take more capital to acquire and that kind of thing. In your experience or in your opinion, if that's what somebody's trying to focus on, I don't know, like what are some, well, I know when a person's trying to do that, they're generally going to get a lower acceptance rate, lower response rate. Like it's just going to take more mail because those are not quite as plentiful. And when you do find them, it's just going to take more to get them done. And some people kind of go into this thinking like, I'm just going to do that and be done. And then I realized like, well, that kind of changes things in terms of like the difficulty of finding deals, and you're possibly going to be sitting on them longer, and you're probably going to have to offer terms. So like, you better be ready for that. And I'm just, from your experience, like what are the biggest catches to doing that? Like what makes that hard, and what should a person be aware of first if they decide to go that route?
Yeah. I mean, people love the idea of doing like 5 deals a year and making $400,000, right? But the reality is that in order to get those kinds of deals, you're going to send a lot more mail. You're going to offer a lot higher price, and you're going to wait longer to sell it, right? That's it. So, and that's not always right, but as an average, that's how it goes. And that's going to be difficult for some people, right? It could take 12 months, 18 months to sell something. And it's not that it's you're having trouble. It's just that that's how long it takes to sell something that big. Because finding someone who wants to buy something at $150,000, there just aren't that many people wandering around who either have $150,000 cash or have the capability to go get a loan. Because I find that at around 100,000 and up, you're not going to be finding as many people who want to do owner financing who can put enough down to make it worth it. You know what I'm saying? So, because if they've got $50,000 in their pocket or $75,000 in their pocket, they're probably already have $100,000 in their pocket, or they're just going to go get a bank loan because their rates are going to be way better than what I'm going to offer them. And that's usually what I encourage them to do, right? Like go talk to your bank. Like that's a price point at which they'll probably put something together for you. We know it's difficult often to find a bank to finance a $20,000 purchase, but it's not as hard when you're talking $100,000 or more. So
yeah, when somebody is going to pay you that much for a property, I know like when you're dealing with cheaper deals, a lot of times it's, a they're not really that serious about it. It's almost just like, it'd be fun to own land somewhere. But when somebody's paying a lot more, it's like they have a much more serious intent behind it. Like, do you find that when people buy it, like they literally start, moving dirt and building on it like the next week? Like, is that kind of the type of buyer who goes for that kind of thing? Or is there still a lot of speculation and people who just have a lot more money to throw around and spend on land they're not going to use?
Right. Yeah. Obviously, there's some of that. All right. But I would say, in my experience, that those tend to be people who have a vision, typically of building a second house, a cabin, or something. Right. And so this is kind of a step in their plan. I think, okay, first step, I need to buy this 25 acres with a river or a stream, right? And so once I get that, that's step one. And then in 3 or 4 years when I'm ready, I'm going to go to step two where I'm going to build, right? So that's what I find, these people who are kind of moving whatever vision they have forward. And they're not flippant about it, and they're not kind of just off the cuff making decisions. They've usually been thinking about it for years, and they keep an eye on things, and now's the time they're ready to pull the trigger.
So when we talk about these bigger deals, and if you're sending out a direct mail, presumably your acceptance rate is going to be lower than if you're willing to take anything and everything and all the cheap stuff that is a lot more plentiful. So in your experience, like how many blind offers does it take to get one acceptance on a deal that's worth, say, I don't know, $50,000 or more? Like, should you be sending out 5,000 if you want one acceptance, or 1,000, or I don't know? What do the stats look like in your experience?
Yeah, I'll be honest. I'm not sure that I'm confident in saying what that ratio is, especially given that I've changed. And it wasn't until very recently that I've kind of settled on specific areas where I really thought I could start tracking that stuff. But I would say that 3,000 to 5,000 or more range, it sounds about right to me, just rule of thumb. For me, honestly, when I look at an opportunity, or I look at a mailer and I say, okay, how did this go in hindsight? There's a lot of long tail on these things, right? So you're waiting months and months later. But really, I look at kind of dollars in, dollars out. So I would say over the summer, I sent about 25,000 units. And I scored, well, it still remains to be seen because I'm still negotiating deals, right? But a handful of deals. And I would say I purchased about $200,000 in property from over the summer. So, I mean, what's the exact number on that? That's hard to say, because one deal is like $100,000 and the other deal is like 10. So it's like.
Do you mean that you spent 200,000, or that's what the cumulative value of those properties are?
No, that's what I'm buying for 200,000. Yeah.
Okay, I got you.
Yeah. So so if I'm spending, let's call that $15,000 with pat costs and other things, right? $15,000 in mail to get $200,000 in property, I will do that all day long. So I don't really care what the acceptance rate is, as long as I keep, scoring a nice fat margin like that. And that's really what it boils down to me. I kind of shoot a wide range where I'm getting that lower 5 acres and up piece that I'm buying for 5, 10, 12, 15, whatever, and then selling for that 15 to 25, 30 range. Those are great. And those are easy to owner finance and even sell on cash. Those are all just fantastic pieces. So I pick those up on the low end to kind of keep things churning to cover all my costs. And then I pick up these more middle, buy for 30, sell for 60, or, buy for 75, sell for 125, 150, whatever. Those pieces are really like, you get a nice lump sum cash from those down the road, but that's a long tail, right? That's a 12-month sale, right? So that's going to pay the bills tomorrow. It's not going to pay for the mail costs I just put out. But that's what the smaller deals help fill in those gaps for.
Yeah, would you say you typically like double your money on average with these deals, or is it like, what do you think is the typical ROI?
For me, I would say with my selection criteria, I shoot to about double my money. I'm not, I mean, sometimes I do better, right? And sometimes I do a little bit worse, but on average, I'm shooting for about double.
Yeah. It's really interesting. People ask me about deal rate all the time,
Yeah,
and
it's a very common question.
And it's really hard to answer because, what I'm getting in my business is probably one in about 1,500 blind offers, roughly. I'm in a much smaller, cheaper property class than what you're targeting, JT. But I was talking to a friend of mine who is probably just doing a little bit slightly more expensive property, not by much, maybe by like $5,000 or so, give or take, than I am. And he hits the exact same counties over and over and over again. And he's getting one in 3,500 roughly. And so, and then I got people that I don't know if maybe like back in the day, things used to be different, or maybe people associate what you get from a delinquent tax list to what you're going to get from blind offers. But I have people that come in, I'm like, I sent out 300 blind offers, I didn't get a deal. Oh, this doesn't work. And I'm like, well, if we compare this to houses, like when I was a house wholesaler, or I worked for a large wholesale operation in Indianapolis, we were getting like one in 8,500 to 10,000 pieces of mail. So like, it's way better still in general in land, but it's all relative depending on what you're going after and really the kind of list you're going after. Because on a delinquent tax list, yeah, you should have a higher response rate and a higher deal rate because they're more motivated. But it's a lot harder to get that kind of a list. So there's all this like variables that go into it. It's a little frustrating, but I just wanted to go for it.
I say it would be nice to be able to just offer up that sweet, like, okay, you're for sure going to get 1 in 750 every time,
every time,
no matter the size and price. But obviously the world is a little too complicated for that.
Yeah.
It is a hard question because, it's obviously comes up from time to time where somebody will say, hey, my mailer bombed. I sent out 600 or whatever and nothing came back. And, I always try to like help them think through it and diagnose what could have gone wrong there. But like, there's so much information that needs to be accounted for to even begin to understand what might've happened. It's like, what did it say? And, where'd you get the list and how old was the list and this and that and that, and it goes on. And it's a hard thing to track down, but I think at the end of the day, it sort of comes down to somebody who is relentlessly going to keep at it until they figure it out. Like if you need to see success on that first time and it doesn't work, it's like, I just don't know many businesses like that where, I expect the guarantee or this doesn't work kind of thing.
And on that, people don't understand that when it comes to direct mail, it's the consistency over time that builds up to momentum. So you might have a month where it completely bombs. I remember in December of 2019, I sent out a direct mail campaign and I thought it completely failed. And I don't know why. I don't have any real reasons why it happened this way. But in December, I didn't get any responses. Come the first week of January, I got more deals from that one campaign than I did all of all of 2019. In the first quarter of 2020, that first quarter, I did actually like more deals in that first quarter than I did all of 2019. And probably, if I were to guess, shooting from the hip here, probably 60% of it came from that direct mail campaign in December. So I don't know why there was a delay. I mean, I don't have a crystal ball. I don't have answers, but you can't just come to this like quantifiable conclusion that direct mail works on one go, or it doesn't work on one go. You have to at least give it 3 months, 6 months of consistency,
Yeah, I found this concept illustrated to me very poignantly at the very beginning of my land investing career. I sent my first mailer of 400 and it was all postcards. And that's where I scored that $50,000 in deals. And I was like, this is the greatest thing ever. I'm going to make all the monies, stand back people. But obviously it didn't work like that because the next mailer I sent 5,000 postcards out, okay? 5,000 postcards to a different county. And I got 13 calls total, no deals, just 13 calls. And I was like, what happened?
Yeah.
So then it was, but the reality is if you don't have any understanding of statistical theory, it gets really easy for it to feel unjust, right? You're like, I spent so much money on this mail. How in the world did I get nothing back for it? But the reality is it just happens sometimes and stuff bombs and that's okay. Just keep mailing. It'll be all right.
Yeah, I knew somebody. It was actually Renee who we interviewed on episode 30 of the podcast, but she, I don't remember the exact numbers, but I think it was like her first mailer ever, and she sent out like 53 postcards or letters that didn't have offers on them or anything, and she got a deal that made her over 50 grand.
What?
And
That's
I mean,
so awesome.
it was just like, I mean, it sort of was a luck thing, honestly. But like if you hear that and nothing else, that becomes the expectation. It's like, oh well, I'm gonna do the same thing, and if it doesn't happen just like that, I'm gonna be upset about it. It's like you said, JT. It's, I don't know. It's a weird thing, and it's hard to nail down what is going on and when it does and doesn't work. But it's sort of that get up and try again kind of thing. So with some of these bigger deals you've done, just a much larger cash outlay than a lot of the cheaper stuff out there, it begs the question in my mind, have you ever miscalculated this stuff and lost money on a deal? And if so, what happened there? And what did you learn from that? How can we all avoid a mistake like that?
Yes, I have definitely lost money and broken even on more than one deal. Fortunate, I would say I'm fortunate to say, because I would rather, I'm the kind of investor who would rather take the loss and move on than hold it just so I could claim that I've never taken a loss. Oh, I've never taken a loss, but I have this property I've owned for 6 years because I just refused to sell it, so I don't take a loss. That's not quite the same thing. So I'd rather just be like, it's a business conversation, right? I'm like, okay, the ROI on this says sell now, put my money to work somewhere else, not hold forever and hope that I do okay way down the road. So one deal in particular was particularly painful, where I was kind of dabbling in infill lots at the time. And I bought an infill lot on the west side of Portland. And it looked great. Called the county, things seemed to be okay. It was kind of a weird lot, but the market is super, super hot, and still is. And I was like, okay, somebody can, if you can build anything on this, someone will. So I thought, okay, we can make this work. And I paid someone else as well to kind of look in, do some additional looking at the property, and they found the same thing I did. Looked fine, and I was like, okay, cool, this is good. Everything's lining up. The church I bought it from was a little skittish because they had previously kind of tried to sell it and ran into some buildability issues. But I knew what those issues were, but I thought they were surmountable, right? So I went ahead, purchased a property for $40,000 roughly, and put it on the market. And like 2 days later, I was under contract at 120, and I was like, yes, best day ever. Going to make a ton of money on this deal. And then like a week later, they back out. I'm like, oh, that's not good. And they're like, yeah, builder says they can't handle it. I'm like, oh, that builder's probably just has like a few selections to choose from. It won't be an issue. I'm just finding somebody else who will do a custom build, not like a out of the box. Okay, fine. So then I get under contract again, like a couple weeks later. That person backs out. And I'm like, this is starting to be a pattern. And so then that continues, right? I literally get to the point, and I'm continually getting questions about this property because it's such an interesting piece and there's not really any buildable lots around. And so I've literally over time, over the next few months of me answering questions and like turning down contracts, I developed like this 5-paragraph email that I send out every time someone wants to buy this property. And it's 5 paragraphs of me telling them all of the things I've discovered wrong about this property and why they shouldn't buy it. And if they're still interested, talk to me. And that became pretty effective to kind of weed out people who are interested. But I eventually went through a couple of different like professional builders who literally just buy stuff like this and solve the problem and build. And I couldn't come to terms with 1 or 2 of them. I got another one under contract who was like, I'm not even going to build on it. I'm just going to park my trucks on it and throw up a fence, and it's still worth the money. Cool. That guy was the one who kind of broke the straw that broke the camel's back for me on this property, because he, and this is all hearsay, right? But he comes back to me and says, I can't do this deal. I sent him an email. Hey, no worries. It's all good. I know it's a complicated piece. Can you tell me why exactly you don't want to do it? Like an hour later, I get a call from him, and he says, my wife says I have to call you and tell you what I learned. I'm like, oh, this is not good. So he then proceeds to explain to me how his conversation went with the county, or the city in this case. And the city effectively said to him, and he had contacts, so he was able to kind of climb the ladder, right? He doesn't get like the front person who says, it's fine. He keeps climbing and climbing and climbing until he gets to the decision maker. And the decision maker says, this property? Oh, yes, I know that property. I take my lunch there every day. I will never approve building on that property. And I was like, okay.
That sucks.
I was like, that's number one, illegal, right? That's not going to work. But two, I can't solve this. I'm not going to litigate. I'm not going to do all this stuff. It's not worth it. And so I don't know if that's true or not, but it was enough at the time for me to say, I'm out. This is not going to work. I'm going to sell to somebody super cheap. And then just tell them this is a mess. The county is going to be difficult to work with. Like, good luck. And so I just found a buyer, and I ended up losing maybe $12,000 on that property. But I was like, I don't care. I just want my money back at this point. I am done.
Wait, so am I following this right? That the only real problem, well, I guess it sounds like there were a lot of problems, but the big issue was this county worker wasn't going to approve it because they could eat their lunch there?
That, I would say, is the crux of the issue. There were other layers.
Crazy.
There was a lot of easements and some cost to move utilities, things like that. But I think those were all surmountable because, again, it's so difficult to find a buildable lot in this area. People were willing to pay it to live in the area and build a custom home. But that none of that mattered if they would never approve a build permit for this property, right? So, could I have figured that out ahead of time? I don't know that I could have, but it's just, for me, it's part of the statistics. Like, I'm gonna lose occasionally. I'm gonna break even. I'm gonna do these things, and that's okay. Like, that's fine, because as long as you're doing enough deals and you continue to push forward, it's just, in the end, it's just gonna be like this blip on the radar where it's like, oh yeah, that one time I lost $10,000 and the next month I made 30. Who cares, right?
Mm-hmm.
Yeah, and on that note, I really think that the way a lot of people approach the land business isn't right. They need to approach it as an investment portfolio. When you talk to people who invest in the stock market or even large apartment complexes and stuff, when they own a lot of property, when they look at it from a portfolio, people make money and lose money all the time. But as long as the overall portfolio is making money, that's what matters at the end of the day, because that's really what's going to move the needle forward with you generating wealth for your family and legacy and so on and so forth. So I really want to encourage the listeners today, when you approach your land business, I really like what JT said here. If you have a property and you could take the money that you have in that and invest it in a different property and make a whole lot more, just get rid of the thing and move on. Count your losses and just move on.
JT, one last question for you. So if you could go back in time and give yourself some advice as you were getting started with land, what would you say to yourself? I'm sure you've probably learned a ton, and there's a lot of things you do differently now, but I don't know. What do you think?
It's difficult to say, but I guess if I had one piece of advice I could give myself, it would be that I need to be cautiously optimistic, because I think a lot of times when I made mistakes through the beginning of my land process, and I'm sure as I'll make mistakes go forward, it really boils down to me like kind of convincing myself that something's going to be okay. I'll be like, oh yeah, this will be fine. I'll work out these issues. It's not really a problem. But the reality is I'm not really being unbiased enough to recognize that I'm being a little too optimistic, and that's kind of a fault of mine. So that's kind of the advice to give myself would be, okay, look, I know you want this to work, but don't try and force it where it doesn't need to happen. Just send more mail and find a better deal.
Yeah, I love that.
That's a tricky thing between optimism and cynicism. I heard Jordan Peterson one time talking about this, and he was saying that you don't want to be just totally optimistic in life, because it's not reality. Like, things are always going to go wrong. There's always problems. But at the same time, you don't want to be totally cynical either, because it's not useful. Like, it just holds everything back. And I think it was him who he sort of drew the analogy of cynicism is sort of like the salt in the recipe. Like, you want to have just a pinch of it, but you don't want to dump a bunch of salt into what you're doing, because if you ever had a great chocolate chip cookie with just that little bit of salt on it, it's perfect. But if you overdo it or underdo it, it's just not the same. If you overdo it, it can really screw it up. So I thought that was kind of a smart analogy.
Yeah, I really like that.
I'm getting hungry now.
Yeah, I think that it's pretty essential to be realistic, but optimism can be a superpower too, because if you are too cynical, you're never going to take risk. You're never going to actually go after pursuing anything worth pursuing. So you got to do it with a realistic, I like how JT called it, cautious optimism. I think that's really a healthy approach.
Definitely. So, JT, at the end of most of these episodes, when we have time, we ask 3 final questions of our guests. And The first question here is, what is your biggest fear?
My biggest fear is that through either my own selfishness or kind of my general, failings, that I fail to like kind of fulfill some purpose that like the Lord has for me, some divine purpose in my life, right? That's kind of my biggest fear, is that I'll look back at some point in my life, at the end of my life, and think, man, my mistakes caused someone else harm, or my mistakes resulted in this outcome that could have been so much better, right? And I think that's the one thing that I'm really most concerned about. Uh, and that kind of extends to lots of aspects of my life, whether it's professional, where I kind of I miss out on an opportunity to help someone who needed the help, or personally, it was like, did I spend enough time with my kids? So I want to make sure that I'm kind of doing my best in those, recognizing that we're all human, right? And I make a lot of mistakes, and I'm okay with mistakes as long as I feel like I did my best.
Yeah, that's awesome, man. Thanks for sharing that. What's something that you're most proud of?
I would say it's probably the other side of that coin, right? I think I'm most proud when someone comes to me, right, maybe years down the line, and says, do you remember that conversation we had? Or do you remember that time that you helped me do this? And how that ends up being something important to them in some way, that I got to play a piece, right, in helping them grow, or helping them overcome a trial they're facing, or whatever circumstances they were in. Because I kind of relish those opportunities to kind of help people develop themselves, because I'm the kind of person who's really sort of obsessed with self-development and introspection. And so I love when I get to help other people kind of think on that plane and kind of change their lives in small ways.
Gotcha. That's awesome, man. What is the most important lesson you have ever learned?
I would say professionally, the biggest thing that's been illustrated to me over and over and over again is the critical nature of communication. Because if you can properly communicate with someone, if you can really understand where they're coming from and help them address whatever circumstance they're facing, and kind of fill whatever needs those are, that is where the needle really starts to move. And you see this illustrated in different points. If we're talking like Carnegie's How to Win Friends and Influence People, he talks about finding what people like, right, and what's important to them, right, and communicating to them on that level. That breaks down barriers fast,
Yeah.
right? Or finding, like, if you figure out, if you can align what you want with what your kids want, and communicate that then you can move the needle there. So I find that communication in a lot of realms in our life is the most important piece. You can overcome all kinds of issues and like disagreements and whatever if you can just communicate.
Yeah.
Love that.
Yeah, it's a great book, and yeah, tons of lessons from that. Would you say you're like a natural people person? Is that kind of how you classify yourself, or what do you think?
I would say I kind of classify myself as a small group person, right? I love the one-on-one, the two-on-one conversations. Those are where I thrive. If you throw me into a big group, I'm just going to hang out in the corner and find somebody to talk to.
Yeah.
Because I'm not really interested in kind of floating through the room as a butterfly. So.
Gotcha. Cool, man. I can totally relate to that. So you don't have to do this, but if people want to learn more about you or reach out to you and connect for anything, is there any place they should go to do that? A website or social media or anything? Or
I would say,
nothing?
Yeah, the best place to reach out to me is probably the REtipster forums. I'm on there.
Cool.
Contact, send me a message there, or hit me up there in some way. And if, or frankly, I'm kind of all over the internet is where Land is at. You probably can find me there, but the easiest way is going to be the REtipster forums.
Sweet. And I will,
Awesome.
I'm going to include a link to JT's profile in the show notes for this episode. And this is episode 91. So you can find those at retipster.com/91. And JT, I just want to say thanks again, man, for coming on the show. It's been awesome to talk to you again and just hear about where you've been at for the past year. And hopefully the listeners out there got a lot out of this as well, because I know you had a lot of good insights to share in this realm.